Understanding your financial statements.
What are financial statements? Financial statements are reports issued over a period of time, usually 1 year. They reflect the financial situation of a business. There are four financial statements: the balance sheet, the profit and loss statement, the cash flow statement, and the statement of shareholders' equity. As a small business owner, the most common financial statements you'll hear about are the balance sheet and the profit and loss statement. In this figure, you will see what a balance sheet looks like. On the left side, you have the business assets. These belong to the business and can be anything like buildings or equipment. On the right side in red, you will see the liabilities or debts. This could be credit card debts, loans. Finally, after you take the assets and minus the liabilities, you are left with equity. Equity belongs to the owners or the shareholders. Now, in this figure, we can see actual numbers added to the balance sheet to better understand what a balance sheet consists of. Here you can see how certain items are classified. As you can see, things like cash in the bank and equipment the business owns are listed in the assets section. Meanwhile, debts and other things that are owed show up in the liabilities section. A balance sheet is a snapshot of a business's financial situation at a certain point in time or a specific date. Now we can discuss the profit and loss statement, often referred to as the P&L. This figure illustrates that the profit or loss is a result of the business's income minus the expenses. We would have a profit if this is a positive result, or a loss if it is negative. Putting numbers to this now, you can see in this figure the business's income and expenses over 1 year. Here we list typical expenses such as advertising, insurance, and professional fees. As you'll see, this business has a positive net income of $21,810, meaning it has a profit. So, why are financial statements so important? Well, if you ever want to apply for a loan through a bank or any financial institution, you will need to show your updated and accurate financial statements. Second, since financial statements show the financial situation of your business and gives you a snapshot of the health of your business, they will help plan, manage, and control your business. Third, financial statements are incredibly useful when planning for estimated tax payments, which you will have to do as a small business owner. Finally, when you ever decide to sell your business, your financial statements will form the basis for your business's asking price. Moreover, if you ever decide to close your business, you might have to calculate if you had capital gains for your personal taxes. So, who can you trust to help you prepare and maintain these financial statements? Ideally, you would find a professional with a background in accounting and who has experience with bookkeeping. Also, it'd be great if this person has a deep understanding of small businesses. Finally, you would be looking for someone who also has experience in tax preparation and can advise you during your annual tax return filing. Here at Eki Income Tax Service, we bring all of this and more. Our team has a deep background in accounting, bookkeeping, and really understands the needs of small business. Call us today for a consultation and learn more about how we can support you.